Let's begin discussion of MTP2 for November 2024 attempt related. As I already told, the entire paper is for 120 marks. First you watch MTP1, those of you who didn't watch, then watch MTP2. 120 marks. Then 30 marks is for MCQ and 90 marks is for descriptive, where you will have 10 to 20 marks choice and 70 marks you need to attempt. So they will give 6 questions totally. So one question they will give outright exemption, in the sense one question any one. First question is compulsory, means first question no choice. That's what the meaning. Remaining 5 questions, any 4 you have to write. For all 5 questions, each question carries 14 marks. Each question will have a composition of 1 5 marks question, 2 5 marks questions and 1 4 mark question. This is how the composition will be. That's it. So let's begin directly the MCQs. Pihu Limited is a company engaged in manufacturing of kids' toys. The company sells its goods on credit basis. Mr. Mohan Sohan and Associates have been appointed as stat auditors of Pihu Limited for the year 23-24. During the course of audit, CA Mohan, the engagement partner, asks the management about email address of trade receivables of the company for the purpose of obtaining balance confirmation from the trade receivables. So immediately external confirmation. Yes or no? So they have been appointed as auditor. So like Mohan and Sohan, they have been appointed, whereas Mohan is the engagement partner. He is asking the email address of the trade receivables for purpose of obtaining confirmation. The management of the company asked its sales supervisor to send confirmation request to the trade receivables and collect all the responses and provide all the response to auditor. This is not external confirmation. Sales people, they are only directly getting the information and then giving to the auditor. No, that is not external confirmation of 505. As per 505, the third party has to respond directly to the auditor. The management of Pihu Limited also informed Mohan that confirmation with respect to 2 of the trade receivables, namely Moon Limited and Sun Limited, won't be available as dispute between both. The dispute within both the receivables is going on. With respect to other receivables, the sales supervisor provided Mohan with all the balance confirmation. With respect to the balance confirmation request, which of the following is warranted as per the requirement of the SCA? When, okay, with the Moon Limited and Sun Limited, you have some problem. When there is when external confirmation is not possible, what you need to do? Alternative procedure you need to do. For that, okay, alternative we will do. That point, nothing is given here. 2. With respect to direct confirmation for other trade receivables, sales department involved in between. No, that should not be done. We send external confirmation request with management authorization to the third party, where third party has to respond to us directly. Correct? So let us see. So what are they asking? Which of the following is warranted as per the standard? So in the following 4, what is correct as per the standard you need to tell. Mohan should not have relied on explanation provided by the management with respect to trade receivable, namely Moon Limited and Sun Limited. He should perform alternative procedure. Correct. Mohan should have obtained direct response from all other trade receivables instead of sales supervisor receiving direct response and providing them to auditor. Both are correct. Both are requirements. Both A and B is correct. Mohan should give qualified opinion as balance confirmation with respect to 2 receivable is not available. No, we can't straight away conclude. Even if alternative procedures are not possible, when there is no sufficient appropriate evidence, then you will decide about giving modified opinion. In the absence of sufficient information in the question, I cannot go with D point. These are the requirements of the standard. They are asking what is warranted. Suppose if the D point is drafted like this, auditor has to perform alternative and auditor should have gone direct confirmation. If in the even if audit evidence is not obtained in alternative, ultimately sufficient appropriate evidence is not obtained, then he should have considered his report as per 705. If they gave that option, that would be even more correct. So right now A and B are correct. So which means the answer is C. Correct? All of you. Then Rajiv is conducting an audit of manufacturing company. To streamline audit process, he uses sampling tool to select a representative sample of transactions from large data set of sales records. He may employ a bot to cross-check compliance with statutory payments like GST and TDS. So for sampling tool, he is using a digital tool. And he is also using some bot for doing statutory reconciliations. While reviewing the financial statements, he relies upon Excel to automate calculations such as variance analysis and trend reports. Ensuring the audit is completed on time and meets regulatory requirement. Which type of audit is being done? It's a digital audit, straight away. It's a straight example oriented question. What do you mean by auditing digitally? In the ICA book, it will be there, or in our book, it is there. First point below, they have given example. In example, they used sampling tools and both for statutory compliance. That example only they gave. Auditing digitally. Digital audit is a concept. Audit digitally is a process. Getting it? Here they spoke about audit process. How auditor is doing the audit. How auditor is doing the audit? He is using some sampling tool. He is using some boards. He is doing audit digitally. So that's what the meaning. Audit digitally. Are you getting it? Digital auditing is a concept name. What is digital audit? How it is benefit for the organization? How it is benefit for the auditor? That's different concept. Here they are asking a process oriented question. That's called auditing digitally. Understood? TK Associates, a chartered accountants firm, has been appointed as an auditor of the company for the financial year 23-24. It consists of two partners, T and K. CAT is brother of the father of the finance director of the company, BAC Limited. TK Associates has two partners, CAT. CAT, who he is a brother of father of the finance director. Okay. So, my brother's son is a finance director in a company where I am doing audit. CAK is an old friend of the finance director. CAK, my another partner, no. He is an old friend of this same finance director. Now, technically, disqualification under Companies Act might not apply because this relative definition does not cover this. But it brings familiarity threat. Close associate working in the top management of the company. It's a familiarity threat. What kind of ethical threat is associated? It's a familiarity threat. Correct? It's not self-interest, it's not advocacy, it's not self-review. So it's simple, familiarity threat. Correct? Then, case scenario. Gross Limited, an unlisted company in Jamshedpur, is engaged in the business of spices. Total paid up capital of the company is 10 crore. Details of annual turnover and profit of the last 3 years. Latest year it is 108 crore, whereas loss is minus 6 crore. Just before year 22-23, 278 crore turnover, 1.32 crore profit. That before year 475 and 65. Profit is declining, business is declining. Declining customer demand. One of the symptom of growing concern. Yes or no? The company, moreover, here negative profit. Yes or no? The company is using conventional method of preparing spices. This requires more human intervention and hence cost of production is high as compared to innovative method used by other new companies. Though the company had significant growth in the past years, it had not done well over the last 2 years. That's what we have seen. The latest year is less turnover, previous year also less turnover, business is declining. Where is 65 crore profit? Where is 1 crore profit? And where is 6 crore loss? A new competitor, Spice Herbal Limited, had came to the market during the year. By the end of previous year itself, 2023 itself, they captured around 75% market share by offering a product as reduced price. Emergence of highly successful competitor, that's one of the operating indicator for going concern. Yes or no? They use new machinery which allows minimizing manual steps and reducing cost of labor. Now, in order to reduce the cost of production and thereby recapture the market, the management of Gross, that means our client, has planned to install a new plant with an automatic machine. Okay, they want to now install a new plant and machinery. The estimated cost of plant and machinery is 75 lakhs. The company approached the bank for a term loan of 70 lakhs, which would be repaid in 5 years. On 28th December, the bank had sanctioned a loan and disbursed 35 lakhs also. So they disbursed 35 lakhs. Getting it? Which means company is having no cash problem. Means availability of finance is there. Gross Limited had appointed Hook and Crook chartered accountants as auditors of the company at the AGM held on 15th August 2023 for the period of 5 years. As agreed, the audit team commenced their work for the year 23-24 in February 2024. So for the 23-24 year, no, for 5 years directly they were appointed in August 2023. Generally that is when AGMs generally happen for 5 years. Getting it? And he started work in February 24 and completed the work by May end. The audit team submitted the following findings to the partners. Okay, partner has found the following. PX Limited, one of the vendor, one of the supplier, they filed a case against the company on 10th August for a compensation of 2.5 crore. They filed a case against the company. It's a contingent liability. Sometimes it may even require provision. It's an observation. What management will tell, all that we will see. Company has made an estimated allowance for doubtful, allowance for debtors is at 8%. Some allowance they made, they're just giving some statements. What is the question? We will read and accordingly we'll analyze these statements. 65% of the value of inventory was only covered in physical verification due to fire. As per CARO, you must do 100% of the inventory physical verification once in a year. Company got a show cause notice from State Pollution Control Board for the contravention of some particular rule, some environmental rule, some contravention. They received a show cause notice. 3 incidences of frauds noticed. Total amount of fraud is 1.25 crore. Fraud committed by purchase manager 90, accounts manager 15, and by cashier 20. If individual fraud is exceeding 1 crore, then only we need to report it to central government. Here aggregate fraud is more than 1. No need to report to central government. I told this point. Individually, if the fraud is more than 1 crore, we should report to central government. Based on the above facts, answer the following MCQs. Though the company had significant growth in the past year, it has not performed well in the last 2 years. Yes, that is what financial numbers are also conveying. As per 570, there are certain events or conditions that collectively make us a doubt about going concern. In order to assess whether gross limited is going concern or not, which of the following should not be performed? Oh my God. Which of the following is not a procedure? Remember, when events or condition identified, we do further audit procedure where we observe what is the business future plan of the entity, whether financing arrangements are available. Here financing arrangement is available. Yes or no? We'll see. Analyze and discuss with management to find out whether installation of new plant and machinery would enable the company to reduce. Obviously, this we need to ask. What are the future plans of the entity and feasibility of those plans? So we are asking future plan. They want to invest. What is the feasibility? Will it reduce the cost of production? That is the feasibility of the plan. So this, of course, we will analyze. We will analyze. This we will analyze. Correct? Enquire company's legal counsel. Like this we will analyze. Correct? Enquire legal counsel regarding existence of any legal litigation and claim against the company, reasonableness of management assessment of their outcome and estimate of their financial impact. Obviously, when we are doing any further audit procedure in going concern, we ask company, is there any pending litigations that badly affects the company? Evaluating management's future plan and strategy to increase the market share of the product so that they can recover from the situation. That also we will ask. Analyze and discuss the company's cash flows and profit of the previous years with the projected accounts. So, projections I don't bother here. I am bothered with the past. See, cash flow forecast I will see. Generally what is the cash flow? Cash flow forecast I will see. So profits of the previous year with the projected profits, projected accounts. That and all I will not see. Projected, here going concern issue. Why am I bothered about projected profits, all that? Are you getting the point? So on that context, this point is least relevant. It is not that it is irrelevant. This I will consider, but among compared to 4, this is least relevant. Understood? Here, which of the procedure not to be performed, they ask. Instead of calling it as not to be performed, this is the least relevant procedure that among all the 4. I will look at future plan for sure. I will look for contingent liabilities, any pending litigations for sure to evaluate going concern. I will evaluate whether management future plan and feasibility, whether can they recapture the market, can the cost of production can reduce so that company become competitively advantageous. Are you getting it? So company's cash flow and profit of the previous year with projected accounts, nothing but projected cash flow, projected profit. That analysis I will not do. Are you getting it? That analysis I will not do, or I will give least importance to it. This is bit judgmental. You know, I got another second alternative also. See, you know, here no, they have given litigations also, right? They have given some litigations also, right? Yes or no? Show cause notice. So that's why even these 2 points I should consider no while evaluating going concern in this entity. So that's why the second point I considered. The second point might be important. Generally, you will get a conflict between, in this when you read, no, you will get a conflict between B and D. When you read this question for the first time, you will get a conflict between B and D. Regarding cash flow, company has finance arrangements, bank is ready to give. Cash flow is not affected, company cash flow not affected. Anywhere they didn't give any symptom that cash flow is affected. So that's why I will not do cash flow analysis, because company cash flow is still good. Because it has a very good profit, accumulated profits they have. Are you clear? Anywhere they have not given indication that there is a cash flow issue. So what problems the company is having? One is machinery issue. Market capture issue. Another issue that as we shown in the issues, no, audit team raised no some pending some pending litigation against the company, 2.5 crore. Pollution control related litigation is there. So that I need to continuously evaluate, that I need to for sure evaluate in order to decide going concern. So these three issues are only present based on the question. So these three I will consider. Fourth one is situation is not present in the question. So I will not consider in this case. Understood? Here this is completely case based question. So answer is D. D I will not consider. Why I will not consider? Because the issues related to D are not there in the question. If at all there is a cash flow problem, then I will ask what is the future cash flows, that and all. Next, and what is the basis for cash flow, whether the data used is reliable or not, all that I will evaluate. Next, company has made an estimate for 8% provision. Some financial statement items cannot be measured precisely but can only be estimated. The nature and reliability of information available to management to support making of an estimate varies widely for making different estimates. No, the nature of information, the extent of information available varies. Some estimates I can make accurately, some estimates I cannot make accurately, which thereby affects degree of uncertainty. Correct? So each estimate will have some degree of estimation uncertainty which is different associated with accounting estimate. Please advise which among the following may have higher estimation uncertainty or higher risk as per 540. What are the areas where high estimation uncertainty will be there, high risk will be there? Judgments about outcome of a pending litigation. Yes, this will have high risk, high estimation uncertainty. Estimates made for inventory obsolescence that are frequently made and updated. Not that estimate. A model used to measure the accounting estimate is well known and assumptions are a well known accounting estimate model if you are using. No, you will make a reasonable estimate generally. Accounting estimates made for allowance for bad and doubtful debts where result of the auditor's review of similar accounting estimates made in prior period do not indicate any substantial difference. Like allowance for bad and doubtful debts were there, right? 8%. Previously also when auditor reviewed, no, there is no much variation that is found. So auditor will get here also there is no significant risk from auditor's point of view. So technically these three are not significant risk. So automatically what is significant risk? Judgment about outcome of pending litigation with PS 2.5 crore. That is a significant estimate. Involving high estimation uncertainty, significant risk. So the answer is option A. A I have chosen because these three are not significant risk. Because in these three there is no high estimation uncertainty. One is well established model. One is inventory obsolescence where it is frequently made. Another one is debtors provisioning where auditor in the history, past history, when he verified, no much variation is found. So naturally in the current year also auditor will classify this as low estimation risk. So which auditor will classify among these four cases high estimation risk? Pending litigations. Understood? Then the company in the notes accompanying its financial statements disclosed the existence of suit filed against the company with the full details. The company in the notes in the financial statement disclosed the existence of suit filed against the company with the full details. So what is the pending case against the company? Honestly, they disclosed. Based on the audit evidence obtained, you felt it is necessary to draw users' attention to the matter presented in financials by way of clear additional communication as there is uncertainty related to outcome of the litigation. Which para you will use? Emphasis of matter para. In this situation, which of the following reporting option would be correct if the auditor is satisfied with the conclusions reached with the management and this matter is fundamental to the user's financials? Like everything, you're satisfied everything about what company did, what conclusions, what presentation, everything appropriately disclosed or presented. And you felt it is important for the readers to understand and you want to draw attention. What do you have to do? Include an emphasis of matter paragraph. Having a clear reference to the matter and issue qualified. No, that's wrong. Include in basis for adverse, wrong. Include basis for disclaimer, wrong. Obviously answer is C. Since A, B, C are wrong, straight away D, not even to read. Like anyhow, we'll read. Include an emphasis of matter paragraph having a clear reference to the matter being emphasized and to where relevant disclosures that fully describe the matter. So include emphasis and give reference to the disclosure that fully describe the matter that can be found in financial. So the answer is D. Easy. The company got the show cause notice from State Pollution Control Board. As per 250, the auditor shall perform audit procedures to help identify instances of non-compliance with other laws and regulations that may have a material effect. As an audit team of the company became aware of the information concerning non-compliance, What would not be the procedure to be performed? What you will not perform? Regarding this, we'll see the options. Understanding the nature of the act and circumstances in which it has occurred. Yes, we will analyze this. Obtain further information to evaluate possible effect. Yes, when there is a nature of, when you identify non-compliance, just to get the data regarding nature of non-compliance, why it was performed, what is its impact on the financials, we for sure evaluate. Whenever we identify non-compliance, what is the nature of non-compliance, how it occurred, circumstances under which it was performed, what is its impact on the financials, we evaluate. Discuss the matter with management, and if they do not provide sufficient information, and if the effect of non-compliance seems to be material, legal advice may be obtained. Yeah, we will do this. Monitoring legal requirement and compliance with code of conduct and ensuring that operating procedures are designed to assist in preventing non-compliance with law. This is the answer. This we won't do. You remember this point exactly we discussed in SA 250 introduction. In SA 250, whether the entity has implemented policies and procedures to prevent and detect and correct non-compliances with laws and regulations, some 6 or 7 points. Whether are they maintaining a register, are they training the employees code of conduct, monitoring legal requirement and compliance with code of conduct, and ensuring that operating procedures are designed to assist prevention of non-compliance. This why will I consider? When I identify a non-compliance, I will see what is the nature of the non-compliance, what is its impact on financials. I will discuss the matter with the governments. If I require, if I will, I will go for legal evidence, legal advice further. Further, I will evaluate the implication of non-compliance in relation to other aspects of the audit, including risk assessment, reliability. When I identify some non-compliance, I will see whether this has impact on my other audit procedures, other areas of the financials. This I will see. Correct? When I identify non-compliance, why will I check whether entity has implemented controls to prevent a non-compliance? That procedure is not relevant. That I will do as part of risk assessment. Yes or no? So C is irrelevant here. C is irrelevant. What is C? In our SA 250 introduction, you see second question or first question. Third question, what are the policies and procedures that we implement? Inside that, one of the point. What is the point inside that? Correct. And operating procedure designed to assist prevention of non-compliance with laws and regulations and report accordingly. No, that we won't do. This is complete control check. Correct? Yes or no? This is not. I mean, see, in this case, this point we don't consider. See, you identified some pollution control related non-compliance. With regard to that, what you will do? So here, what they are asking, with regard to that, what you will not do? Indirectly identify what you will do for non-compliance. You will do all this. This I will not do. Why will I do this? I would have done this long ago. I did all this in my what processes, policies and procedures company implemented to ensure that they have a system of identifying laws that are applicable. They have a system of complying with those laws and regulations. They maintain a legal register. They monitor legal requirements and compliance of code of conduct and take action on the employees who are failing to comply with code of conduct. Yes or no? All that we will do. Yes or no? So this and all we do what? At the beginning, before I go in depth into the laws and regulations. Then I will go in depth into laws and regulations. If I identify a non-compliance, what I will do? I think we have a question on that. What if auditor identifies a non-compliance? You discuss the matter, and if the non-compliance seems to be material, legal advice may be obtained. Understand the nature of facts, circumstances. We have a question on that. You see, what if auditor identified non-compliance? 3 or 4 points will be there. And evaluate the implications in relation to other aspects, including risk assessment and reliability of representation, and take appropriate action. We have same answer. Correct? So A, B, D we will do. E we will not do. So the option is C. Correct? The company had availed some amount of loan for new plant and machinery during the year under audit. Out of the total loan sanction, an amount of 35 lakhs was reserved for purchase of machinery, spice grinder. But the company had acquired an improved model of machinery, that is spice grinder and mixer instead. Can I call this as purpose of term loan is utilized for some other purpose? Suppose I got a loan to buy grinder. I bought an advanced grinder. Purpose is met, no? There is no wrong, nothing is wrong here. If I use it completely for buying land, then that's a different story. State which of the reporting option would be correct. State the fact in caro. Out of the term loan taken, 35 lakhs was not utilized. Wrong. Ask the management to change the terms of not required. State the fact in care the term loan was taken has been applied for the purpose for which it is sanctioned. This is correct. We'll see D option. State the fact in care report that term loan was taken has not been applied. That's wrong. So the answer is C. It is applied for correct purpose only. They can buy upgraded item also. That's not an issue. The thing is, purpose for which it was bought should not be used for some other purpose. Yes, the purpose is same. They want to buy some spice grinder, a machinery, advanced machinery, so that cost of production can reduce. The same purpose only they met. Correct? Next, case number 2. The UNCO Bank was having 145 branches all over India by the year ending 31st March 2023. If nothing is given, assume that it is a nationalized bank. So no, private sector banks, other banking companies. Assume that it is a other banking companies. If it is nationalized bank or government bank, they will give you. So we assume that if nothing is given, we assume that what? The private sector bank. Private sector bank. Okay. Next. 12 branches of the bank were already covered for concurrent audit, and the bank's audit committee has decided to include the below mentioned branches for concurrent audit. Udaipur branch, which deals in treasury functions like investments and inter-borrowings, but not in rediscounting, bills rediscounting. Udaipur branch is mainly dealing with investments and interbank borrowings. Varanasi branch, which started foreign exchanges business in February 2024. Okay. Chandigarh branch, whose aggregate deposits were more than 35% of the total bank deposits. Okay. Globe and Associates, they are chartered accountants. They were appointed as stock auditors by the bank's audit committee for 4 branches of the year 2022 to 2023. Who can appoint stock auditor? Stock auditor can be appointed by management. Audit committee and board of directors only they will appoint. Bank's audit committee only can appoint. The bank's management appointed and fixed remuneration of Globe and Associates chartered accountants as statutory auditor for 20 to 23. It's wrong. Stock auditors and statutory auditors cannot be same for the same year for any of the branch or other branches of the bank, or even not only the bank, bank's sister company is there, na? A bank's subsidiary or sister company, for them also you cannot. In ethics, ethical standard board recent decisions we have right in ICA material. Inside that, one of the point I told you to specifically mark that point. For example, we'll see whether ICA book contains that. It is there in the ICA book. It is for sure, it is there. In ethical standard board recent guidelines, statutory auditor, stock auditor cannot be same. We read it from ICA book directly. We read that from ICA book directly. So I'll directly show you from that. நம்ம bookல இருக்கா 16th point. See in our book last page in the ethics 16th point it is there, but we didn't read in our book. We directly read from ICA study material. Those points alone we read, and I also told you to mark it. Please read from ICA material. In our book also it is there. What is there in our book? Exactly. So any sister concern of the bank or within the bank for the same branch or other branches, if you are doing statutory audit, you cannot accept stock audit, because stock audit is an internal assignment. Stock audit is what? Internal. Why banks do stock audit? To know whether the loan given to customer is correct or not. That's a management process. Technically management has to do stock audit there. Instead of management, they recruited you. Whereas the stock audit purpose, who is the user of stock audit? Bank only, bank management. Whereas your branch audit report, shareholders are the users. Understood? Stock audit is not an assurance engagement. I told you stock audit is an agreed upon procedure. If you recollect, stock audit is an agreed upon procedure, or stock audit may be coming under audit of single financial statement where there is a specific user. Where there is a specific user. 805 engagement, I told you example, or even agreed upon procedure, you can take this as an example. Understood? where the user is specific. Stock audit report, is it a public document? No. Stock audit is an internal assignment. Understood? Next. So statutory auditors for the same 5 branches for which they were given assignment of stock audit. Okay, so for 5 branches they were appointed as stock auditors as well as stat audit, which is not correct. At Kolkata branch of the bank, there were a high value cash deposit in one of the current account during the year 2023. Your firm has been appointed as concurrent auditor of Kolkata branch 23-24. The cash collected by the branch was remitted to currency chest on the very same day. But during the concurrent audit for the month of April 2023 itself, the auditor noticed that branch was unable to show intimations sent via email to currency chest for cash remittance. They are not able to show the proof that they remitted to currency chest. Understood? Okay, case study over. Based on the above facts, answer the following. Globe and Associates chartered accountants were already appointed for stock audit by audit committee for 4 branches. So whether Globe and Associates, are they authorized to accept the appointment of stat auditor for the same branch? Select the correct option. No, they are not authorized. They cannot accept the appointment as it was not offered by audit committee, banks management. No, that's wrong. They can accept wrong. They can accept wrong. Last option. This might be correct. Globe and Associate chartered accountants cannot accept the appointment as audit firms should not undertake statutory assignment while they're also associated with internal assignment for the bank. Internal assignment means what? Stock audit. Stock audit is an internal assignment. Are you clear? D. Understood? Whether banks management is authorized to appoint and fix remuneration of statutory auditor without consulting audit committee and board of directors or member of AGM. Whether banks management is authorized to appoint and fix remuneration of the stat auditor without consulting audit committee and board of directors or members at the AGM. Now here, appointment of auditors is the question. In case of a State Bank of India, C&AG will appoint. In case of nationalized bank, board of directors and audit committee after taking prior approval from RBI. In case of other banking companies, the auditor can be appointed by members at AGM, and whenever AGM members are appointing, members only will fix the manner of fixing remuneration. Remember, under 142 section of the Companies Act, members will fix the remuneration of the auditor they appointed, or members can fix manner of fixing remuneration. Like they may say board of directors will fix, but members have to give an authority like this. Members have to take a decision. So here banks management is authorized to appoint fixed remuneration without consulting audit committee. That's wrong. First of all, members have to approve, yes or no. Banks management cannot appoint or fix the remuneration of the statutory unless the same is passed by resolution in the AGM. That's correct answer. Clear? Because here the bank is not a State Bank of India, not a nationalized bank. So by default, not a regional rural bank. By default, I assume any other banking company. Remember, private sector banks. For private sector banks, who can appoint the auditor? Members at the AGM. Yes or no? But whatever it is, prior approval of RBI is required before recommending the auditor in the AGM. Before recommending the auditor in the AGM. In the selection of the auditor, who will participate? Audit committee and board of directors. Both will. Audit committee will select, recommend to board of directors. Board of directors will recommend to members, and members should ultimately appoint and fix the remuneration. This is what happens in private sector companies. Correct? So that's it. Answer is D. Or here A. 10th question answer is A. How the discrepancy of not preserving the intimation of cash remittance to currency chest should be dealt by concurrent auditor in his report. Select the correct option. The auditor should report the matter as a major irregularity in the audit report to the management. The auditor should verify the details from emails sent to currency chest and close the matter. As it is a minor irregularity, the auditor can ignore. The auditor should discuss the importance of preserving the hard or soft copy of the email sent for cash remittance with the branch manager and check for its compliance in the next audit report. The auditor should report the matter as a major irregularity in his auditor's report. What is the issue exactly happened? Once again, we will see the issue. The cash collected by the branch was remitted to currency chest on the very same day, but during the concurrent audit for the month, April itself, the auditor noticed that branch was unable to show intimations sent via email to the currency chest for the cash remittance. So they remitted cash on the same day, but they didn't maintain the email copy. So we should, I think here, they didn't have, auditor has no doubt about the remittances. Auditor is believing the bank. Just the documentation is not maintained. When documentation is not maintained, it is not a major irregularity. Now, so the auditor, since it is a minor irregularity, the auditor can ignore. But instead of ignoring, what should we tell? What should we do? Tell the bank importance of preserving either soft copy or hard copy for cash remittance, and see whether bank is next time maintaining the remittances related slips and all. Check for better, yes or no, between this and this, D is better option, no? Instead of ignoring this issue, it is D is better option. Are you clear? This is not a major irregularity. Suppose if they do not remit on the same day as per the rule, they are remitting after a week the cash to the currency chest, which is a violation as per the rule, then that's a major irregularity. They remitted, just the documentation proof that remittance is there, no email confirmation, that they didn't maintain. The auditor should verify the details of email. First of all, they don't have a copy, that's the problem. They didn't have the copy of email, so how come you verify? This is not possible. It is not a major irregularity. At the same time, I can ignore the same, assuming it is minor, but this is better, no? Are you getting it? So D option is better than C. C is not wrong. D is more right. Concurrent audit. That's why in concurrent audit, what is the objective of concurrent audit? To identify process loopholes and recommend measures. Concurrent auditor's duty is not to find fault. Their duty is to identify lapses in the processes and recommend the management what can be done for the better. So next time they will come and review. That is the objective of concurrent audit. So the answer is D. You might even select C, but compared to C, D is more right. Understood? Whereas A is wrong, B is wrong. Whereas C is not wrong. Whereas D is right. Understood? So case 3. Messrs. Aim and Co. Chartered Accountants is a newly started firm. Their first assignment was to conduct statutory audit of Crackers Limited, a cracker manufacturing company. Since it was their first audit, the partners immediately accepted the work without paying attention to procedures. You directly accepted, some company audit without checking any procedure, without following any procedure. You need to check compliance under Companies Act. You need to communicate with the previous auditor. You need to do various other things. You didn't do any, you blindly accepted the audit without following any relevant procedure given under the law. They started their work on 25th May for the financial year ended 31st March 2023. Immediately when the year is over, May itself they started. During the course of audit, the auditors requested for financials of the preceding previous year along with the details of transaction till 25th May of the current year. Nothing wrong. Previous year financial statements you can ask for checking opening balances. Until 25th means after 31st March also you ask to check subsequent events. That is nothing wrong. The management argued that both the details are out of the scope of audit. No, management is wrong. Hence, it told that they cannot provide the details. However, after repeated request from the auditor, they provided finally. So somehow they provided finally, but they argued that it is not irrelevant. This is not relevant. For that argument is not correct. It was suspected that senior accountant could have indulged in a fraud amounting to 115 lakh. However, on further investigation by the management, it was found that there was a gross mistake on the part of accountant who had wrongly debited and credited certain accounts by mistake, which amounted to 17 lakh. Okay, so first company intimated, since more than 1 crore, company intimated to directors. They did some investigation and they got 17 lakhs was an error, sir. That's not a fraud. Since the fraud is totally less than 1 crore, no need to report to central government. Though it was more than 1 initially, later it was found that it is less than 1 crore. So it is not, no need to report to central government. The company provided proper and correct evidence for the balance amount. Oh, for the balance amount, they provided evidence what happened exactly, fraud and all. Hence, the auditors were strongly convinced that no fraud had taken place. Oh, even like there is no fraud. Due to absence of audit committee, the auditor suggested to the director to replace the existing accountant as he was poor in the basic accounting skills. Okay. To some extent understood. We'll see the question to get a better understanding. If at all in the question, if at all we are not getting, we have to come back and read that particular part of the story once again. Just like how we did for concurrent audit question. Initially, the company thought of handing over the tax audit work to previous auditor. Okay. However, since they had bad experience last year in the form of an argument regarding contents to be included in tax audit report, especially with respect to disclosure of key ratios, it was decided that Aim & Co shall act as the tax auditor. Whether it is stat audit or tax audit or internal, you must communicate with previous auditor and then accept. After conclusion of the audit, Shyam, one of the partners of the firm, was confused as to whether the firm could be held guilty of professional misconduct for a plausible violation of any provisions of the CA Act. Under CA Act, did the firm violated? Definitely. Here no, they didn't follow relevant procedures before accepting. When you're accepting an audit of a company, what procedure you must follow? Do not accept the audit of a company without checking compliance under Companies Act, clause number 9. Do not accept the audit of a company without checking compliance with clause number 8, communication with the previous auditor. Both are dealing under part 1 of schedule 1. Both are not compliant. He contacted Gyan Shyam, his partner, another partner, to get clarified about the doubt. Okay. Case study still is there. Oh my God. So until now, little bit over case study. Still half more is there. There is another company, Messrs. Hire P Limited. A recruitment agency contacted Shyam regarding a vacancy in one of the leading manufacturing company. Eventually, Shyam resigned as a partner of AIM & Co, joined the company, and the agency raised an invoice for services rendered by them, which amounted to 0.2% of the CTC offered. Schedule 1, part 2, clause number 1, agree to pay, agree to allow any part or share of his emoluments, yes or no, for procuring the job. A CA in employment is treated as guilty of professional misconduct, clause number 1, whereas clause number 2, agree to accept from service providers or vendors of the employer. That is clause number 2. Here you agree to pay, right? Remember, if you agree to pay, that itself is enough. Pays or agree to pay, allow or agree to allow. Even if you agreed with somebody, that's enough. Subsequently, Mr. Shyam agreed to pay the amount. Okay. However, since his friend was a manager, he received full discount. But you agreed to pay, no? It's treated as guilty. Subsequently, whether you paid really or not doesn't matter. The moment you agree to pay, that's enough. Correct? So, clause number 1, part number 2, schedule number 1. Angered by the act of resignation, Gyan Shyam filed a complaint with the Institute of CA stating that Shyam has violated provisions of CA Act and is guilty of professional misconduct. Since one of the partners suddenly resigned and went no. So the other partner complained to the ICA that he paid commission and then got the job. Getting it? Having came to know that Gyan Shyam was the one who filed the complaint against Shyam, Shyam decided to take the revenge. What he did, while thinking of a suitable reason to file a complaint, okay, now this fellow, the Shyam, is looking for reason. What, on Gyan, what complaint I should file? He recalled the fact that, Ghanshyam was engaged as registering authority for obtaining digital signature for his clients. Hey, you can be a registering authority for getting digital signature. Ethical Standard Board decisions, we have seen it. A CA in practice can act as a registering authority for getting digital signatures. So this fellow complained. Quoting the same, he filed a complaint against Ghanshyam stating that he was guilty of misconduct for violating. No, he is not guilty. Correct? Ethics question entirely. What can you infer from the situation given in the point number 1? What is point number 1? Here, this one. The auditors requested financials of the previous year along with the details of transactions till 25th May. The management argued that both the details are out of scope. That's wrong. Management argument is wrong. Correct? Management was right. Both auditors and management have right to ask. Both details. No, that's not. The auditors have right to ask only the details of preceding year and not the details. No. The auditors have right to ask both the details. Management contention is that out of scope is wrong. Answer is D. Correct? Easy. Next. Messrs. AIM & Co. Remember, it's not just figuring out the answer. Why it is right also I told. You can ask previous year for opening balances up to post March 31st also for subsequent events verification. Yes or no? That's the reason why you are asking and management cannot deny that. Messrs. AIM & Co. guilty of professional misconduct. Is AIM & Co. guilty of professional misconduct for any of the provisions given under 1949? If so, as per which clause? Clause number 1, part number 1 of second schedule. No. No, that is not, clause number 1, part number 2, second schedule is about confidentiality breach. Yes or no? Yes, clause number 8, part number 1, not communicating with the previous auditor. Yes, clause number 2, part number 2. Firm did not violate clause number 2, part number 2. With the part number 2, one of the partner violated, that too clause number 1 he violated. Correct? They are asking firm violation. They accepted audit without any procedure, right? No, the firm has not violated. No, that's wrong. Clause number 8, which is yes. Clause number 8, the firm has violated because the firm has to communicate previous auditor before accepting. Yes or no? Is Mr. Shyam guilty of professional misconduct? If so, because Shyam resigned and accepted a job and agreed to pay commission. So in part number 2, schedule number 1, clause number 1, correct? Clause number 1, part number 2, first schedule. The answer is D. Correct? Is Mr. Ghanshyam guilty of professional misconduct? If so, under which clause? You know, in the revision class which I uploaded in the YouTube, I explained how to mind map the entire clauses. If you forget how to recollect it, getting it, I made a mind map. So you can watch it. Some half an hour I spent so that you can memorize that entire ethics. Is Mr. Ghanshyam guilty of professional misconduct? If so, under which clause? In my latest marathon, which I uploaded in September month. September 2024 month, I uploaded for November exams. Part 2 marathon is there. Inside that, the first entire 3.5 4 hours topic is ethics only. So inside that, I clearly explained on memorizing clause numbers, all that. Is Ghanshyam guilty of professional misconduct? If so, under which clause? Ghanshyam is not guilty. No, he is not guilty. Correct? Yeah, clear? So, you know, generally when I'm explaining ethics in a regular class, the order in which we discuss is different. But when I'm explaining in revision, I discussed in different order altogether. I came from the last part of each schedule and to the first part. So remembering is different there. Getting it? Yes. Next. So MTP, MCQs are over. How much time it took? Hardly 46 minutes it took. Oh, decent time. But 58 minutes is what we have. 54 or 58 minutes. But we could able to discuss, we could able to figure the reasons, we could able to explain and answering also. Entirely we completed within standard time, less than standard time. Yes or no? Yes, next. Descriptive questions. Neptune Limited is a company that holds significant investment in portfolio of equity securities. Due to decline in market values, the company investments have suffered a notable diminution in value. For the financial year ended, the audit report of Neptune Limited included qualification regarding non-provision of 70 lakhs for the diminution value of the investment. Previous year audit report. As auditor of the financial 2024, how would you report the following situation? If the company does not make provision, if the previous year auditor has given a qualified opinion, and the reason for qualified opinion is relevant and appropriate in the current period and material, the current year auditor shall also qualify the current year audit report. If the company makes adequate provision, what auditor has to report? He will not qualify. But in the other matter paragraph, we will just mention the fact that previous year financials were audited by preceding auditor and he gave a qualified opinion. That alone we will mention. Correct? You see the answer? Same answer. 710. That's what. 710 reporting. For first case, you need to qualify. For second case, you just have to refer in the other matter paragraph that previous year auditor is somebody else and correct one, you know? Yeah. Neptune Limited is a company that holds significant investment in portfolio. Due to decline in market value, the company investments have suffered a notable diminution. So simple, they are holding investments. There is a diminution in value of investment. For the financial year 31st March, the audit report of Neptune included a qualification regarding non-provision of 70 lakhs for the diminution. As the auditor for the financial year 2024, how would you report the situation? Last year audit report contains a qualification for non-maintenance of provision. Last year provision the company has not created. So last year auditor qualified saying company has not created provision. Good. Now current year you are the auditor. In the current year audit report, if the company does not make provision even in 2024, means this year also they did not make provision. If here one assumption you need to take. Prior period financial statements were audited by preceding auditor. Assumption you have to take. Because it appears like that. If at all you are the only auditor who did prior period audit also, they would have told you. Getting it? So I am taking an assumption that prior period financials were audited by preceding auditor. When prior period financial statements were audited by preceding auditor, and where he gave other than unqualified opinion, and the reason why he gave an qualified opinion persists even now, the reason, and you also felt relevant and material in the current year, what opinion you should give? Qualified opinion. This point is mentioned under 510 also. This point is mentioned in 510 also. In 510, you see modification in the preceding auditor's report. One of the point in 510. If prior period auditor has given a modified opinion in the prior period financial statement, see whether the modification is relevant and material in the current period. If so, the current auditor shall also give a modified opinion on the same. Suppose if the company makes adequate provision in the current year. Okay, current year they made adequate provision. Fine. In such a case, in the current year you will give unqualified opinion. However, under other matter paragraph, you will mention the fact that prior period financial statements were audited by predecessor auditor and the auditor has given a qualified opinion on the prior period financial statements. Understood? We'll see what answer they gave. Both they gave only from 710 point of view. No. Only entirely they gave from 710. Of course, though I told 510, I told remember 510, 710, both are interlinked with respect to that point. Refer to both current period auditor figures and corresponding figures in the description of the matter giving rise to modification when the effect or possible effect of the matter is material. In other cases, explain the audit opinion has been modified because of the effect or possible effect on unresolved matter, and corresponding figures. In the instant case, nephew does not make provision for the diminution in the value of investment, so the auditor will give modify the report. If however the provision is made, auditor need not refer to earlier modification, but in other matter paragraph you may have to refer. Okay, here what they have taken conclusion is predecessor auditor point they didn't take. They considered the same auditor. They have taken the assumption that the same auditor has audited. When you are the same auditor, in the basis for qualified opinion section, you refer both about current period and prior period and you will explain the reasons for modification. Suppose if you are the same auditor, this year company made adequate provision, you don't need to report. Suppose if the previous year financials were audited by predecessor auditor, first point is same. You will under basis for qualified opinion para, you will mention that the company has not created a provision. In fact, in the previous year also it was qualified. This year also I am qualifying. Suppose this year company rectified. In other matter paragraph, I will refer about the prior period auditor's report. Assumption, I have taken predecessor, I have taken an assumption that previous year financials were audited by predecessor auditor. Here they have taken an assumption, they have not taken that assumption. Are you clear? As per 710, corresponding figures and compared statement, when auditors report on the prior period as previously issued included a qualified or disclaimer or adverse opinion and the matter which gave rise to modification is resolved and properly accounted in the financials in accordance with applicable framework, the audit opinion on the current period need not refer to the modification. That is correct. If at all that is rectified, we need not refer. Further, it states that if auditor report on the prior period as previously issued include a qualified opinion and the modification is unresolved, the auditor shall modify the opinion on the current period. In the basis for modified opinion, the auditor shall either refer to both current period and corresponding figure in the description of matter giving to modification. In other cases, suppose if it is material, other cases explain that audit opinion has been modified because of the effect or possible effect of unresolved matters on the compatibility of the current period figures and corresponding figures. Suppose in the current year if it is not material. In the current year if it is material, we will modify current period, you will say that it is material. If it current year, previous year it was material, in current year it is not material. Mistake as it is carry forward, but current year it is not material. In order to explain the effect of unresolved matter on the comparability, in order to explain comparability purpose, okay, you may talk about corresponding figures. You may talk about corresponding figures. In other cases means what? Where the mistake is not material. Last year it was modified opinion because it was material. This year the mistake as is carried out, but it was not material. In that case, explain that audit opinion has been modified because of effect of or possible effect of unresolved matter on the comparability of the current period figures and the corresponding figures. So you just talk about comparability purpose. Last it was materially stated, this year it is not. In the instant case, if Neptune Limited does not make provision for diminution in value of investment, the auditor will have to modify his report for both current and previous year figures as mentioned above. If provision is made, the auditor need not refer to earlier year's modification. Understood? Just open our 710 book, 710 once. In our book 710, When corresponding figures are presented, auditor opinion shall not refer to corresponding figures unless the following. If the auditor's report of the prior period contains other than unqualified opinion, and if the auditor is of the opinion, if the auditor is of the opinion and has sufficient evidence in this regard that a material misstatement exists in the prior period which is not addressed earlier, if the prior period financials are not audited, so this situation it might come. Getting it? Sorry, this A situation. In this case, we generally refer about what? Corresponding figures in our audit report. Because prior period audit report contains other than unqualified opinion. This case, this is what they tested. So we naturally refer about what? Corresponding figures in our current year audit report, because prior period figures contains other than, prior period financial statements contain a modified opinion. So naturally we refer about that same in the current period. Getting it? Now, if at all in the current period it is not rectified, we modify. We modify both the current period figure as well as prior period figure also. We say that it is mistake. Suppose in the current period it is rectified, it is not material. So current period also mistake is there, but it is not material. To ensure comparability purpose, we just tell that prior period was material misstatement, whereas in current year it is not. Clear? That was bit in-depth question. That's a very good question. Please read. So, which one? No. In the B point, if it is material misstatement which is not addressed earlier. Are you getting it? Here in the question, no, they gave two options. One option, if it is material, we should address both. We should qualify. If it is immaterial, we just have to talk about the comparability of the corresponding figures. We just have to talk about comparability alone. That's it. You need not modify the current period financial statements. Are you clear? Suppose if at all that mistake is rectified, no need to talk about that. You need not even talk about that. Are you clear? It was taken from probably little bit in depth. That's little bit in depth question. So better no, here you make a note. Refer. Yeah. You please make a note. Refer question number. What is it? Question number 1A. In MTP 2, November 2024 exams. MTP 2 of November 2024 exam, you just read that. That's very good actually. In question bank, no, under 710 also you add it. In question bank also under 710 you add it. Under 710, please add that. Refer question number 1A from November 2024 MTP 2. Anyhow, I will update the question bank. No, next time I will incorporate this also. It's very good. The question is very good. Understood all of you? Pratibha Limited is a company engaged in manufacturing of iron doors. JLL Limited associates or stat auditors of Pratibha Limited for the financial year 23-24. During the course of audit, CS-ship, the engagement partner found that the company financial arrangements have expired. Okay? And the amount outstanding was payable on 31st March 2024. The financial arrangements are expired. The company has been unable to renegotiate or obtain replacement financing and is considering for filing bankruptcy. These events indicate material uncertainty that may cast a doubt on company's ability to conduct a going concern, and therefore it may be unable to realize assets and liabilities in the ordinary. The financial statements do not disclose this fact. What opinion? Adverse opinion. Straight away, adverse opinion, because the events are, it is expired. Company is thinking of filing bankruptcy. This is a straight question which is there in our book. Illustration, it is there. Yes or no? In our audit report chapter illustrations, we have two illustrations. We have like this. So one illustration expired, in another illustration it will not show expired. I showed you that. In audit report chapter illustrations we covered. You see here, they were about to expire, whereas here it is expired. I made a comparison and then explained that time. Since these two questions are given continuously, getting it? In the above question, why they gave qualified opinion, I explained. Here adverse also can be given, I explained. Understood? Here adverse also can be given. That point I explained. Here they said qualified, but adverse also can be given. Why they said qualified in the above question? Because here it is much more severe. To show severity, there they gave adverse, and there they have given qualified. But in both the cases you can give adverse, not an issue. But this question is what exactly asked. Illustration 4. When you're reading illustration 4, no, read illustration 3 also. Illustration 3. Here it is about to expire. Getting it? Means right now the company has not defaulted. So in this situation, what opinion auditor will give when the financials are not disclosing? The institute have taken an answer called qualified opinion. But in reality, we can even give adverse opinion depending upon the severity. During the course of audit of PEC Limited, Guru has reason to believe that a fraud involving 75 lakhs has been committed in the company by its employees. Is Guru under statutory obligation to report the above matter to central government by filing prescribed form? How he should proceed? 75 lakhs on, less than 1 crore, no need to report. The matter has to be reported to Board of Directors. Yes or no? Can you see the answer? It's easy. Mr. Arjun was appointed as engagement partner for conducting the audit of Kurukshetra Tech Limited for the year 23-24. On behalf of NEMI Associates, Mr. Krishna was appointed as engagement quality control reviewer by the firm for the said audit. Okay. During the year, Kurukshetra Tech Limited implemented an ERP system in phases, leading to automation of certain business process. This implementation has a substantial impact on the overall audit strategy. Mr. Arjun discussed the implementation of such system with Krishna. Who is Krishna? Quality control reviewer. And also told him this matter may be a key audit matter to be reported in the auditor's report. Mr. Krishna considered the significance of the said matter. However, he is of the opinion that ERP did not appear to link with the matter disclosed in financials, and so there is no need to disclose. There is no such link. Key audit matter can be with an aspect that may not require disclosure in the financials. We have seen exact question in our book. Somewhere when we are solving question bank, we have solved this. Key audit matter can be with respect to a matter that may not require presentation in financial statements. In our question bank, we solved, yes or no? In our question bank, we solved this. You see here, what is the auditor responsibility? To report a key audit matter for which there is no relevant disclosure in financial statements. When communicating key audit matter, the fact that there are no disclosures in financial statements related to a matter determined to be key audit does not relieve the auditor from the requirement to communicate it. Just because in the financial statements no disclosure is there, that doesn't mean you are exempted from communicating key audit matter. An auditor may determine key audit matter related to audit of which relevant disclosure requirement do not exist in applicable firm. For example, implementation of new IT system. Same question they asked practically. During the period may be an area of significant attention. In particular, if such change has significant effect on the overall strategy related to significant risk, that is changes affecting revenue recognition. If auditor determines that it is necessary to include information about an entity in order to effectively describe its key audit matter that has not disclosed the financial statements, the auditor should recognize you can disclose it. The fact that it is not disclosed in financials, or the fact that it is no requirement under framework, that is not. Key audit matter is what? It is something that got significant attention of the audit that affected my overall audit process. That's a key audit matter. I can discuss about it. I can discuss about new changes that are implemented in ERP, all that. Understood? So in our book it is there. Next. Not this. Clear all of you? CA Kapila in practice is desirous of filing multi-purpose empanelment for inclusion of her name in the panel of empanelment of statutory audit of bank branches web hosted by Professional Development Committee of ICA for the year 23-24. The form requires applicants to upload XML files of their personal income tax return along with computation of income. Okay. during the relevant year for which information is being sought by PDC, the Professional Development Committee, CA Kapil has transacted in futures and options derivatives and has reflected income from such transaction in return of income as business income. Analyze the above situation with reference to provisions. Would it make any difference if CA Kapil had an income from transacting? Whether you earn income, does not earn income, that and all doesn't matter. You must take a prior permission of the institute when you are doing transaction and derivatives, yes or no, equity derivatives. But I think commodity derivatives is exempted, no? Trading in commodity derivatives does not require permission of the institute. Commodity derivatives only they gave that. For equity derivatives they did not give. Correct? Equity also they gave. Exempted, both. I don't think so. We'll see. Here they gave. Ethical Standard Boards of ICA has announced that it is permissible for a member in practice to engage in derivative transaction in his personal capacity but not in profession. That is on behalf of client you cannot do. Such engagement in derivatives are not violative of clause number 11. Further, members are allowed to transact in equity and currency derivatives. There is no requirement to take permission. I think commodity derivatives not permitted. Equity and currency derivatives is permitted. Commodity derivatives is not permitted. Therefore, there is no difference if CA Kapil had earned income from such currency derivatives. However, in accordance with announcement of ethical standard, but it is not permissible to transact. Yeah, correct. We discussed this point already in our this one. Somewhere in question bank or illustration, somewhere we discussed this. Trading in commodity derivatives is not permitted, but trading in currency and equity derivatives is permitted. Remember we discussed this in our class? In such a case, CA Kapila would be held guilty of professional misconduct for engaging in business other than profession of accountancy. For example, in our question bank itself, we will see. Yeah, here we have seen. So commodity derivatives is not covered in the general permission, whereas equity and currency derivatives is permitted. That point, equity and currency derivatives, I think we discussed. Somewhere we discussed in our book. So that he cannot trade in commodity derivatives, we understood. This question, you see here, same question, 18th question. Same question. PDC, yes or no? Exact question is there in our question bank. You observe. This we discussed. Question number 18, ma, in our question bank, it is the page number is 301. We discussed, no? 301 page number. We covered this. So same question. However, in accordance with announcement, it is not permitted for a member. In such a case, CAZ would be held guilty of misconduct for engaging in business other than profession of chartered accountancy. We covered this. So no, you taken a note also? Material ulla irka? I covered that point, right? Yes. Clear. It's not permitted in commodity. Commodity derivative is prohibited. Equity and currency derivative is permitted. Even you can be an equity research advisor for your friends and clients as per ethical standard board guidelines. Then remote audit. What are the advantages and disadvantages of remote auditing? Any three advantages, three disadvantages. You just have to write. Straight question. Studio Limited appointed AB Associates and CD Enquire joint auditor for conducting the audit for the year ended 31st March 2024. During the audit, it was observed that there is a significant understatement in value of trade receivables. The trade receivable valuation work was looked after by AB associates. However, there was no documentation outlining the division of work between the joint auditors. Comment on the above situation with respect to allocation of responsibilities among joint auditors as per the relevant standard. Allocation of response, comment on the above situation. Okay, the trade receivable valuation was overlooked. However, there was no documentation regarding specific considerations by joint auditor. You should write that, and you should mention that joint auditor should document. Further, in case where there is no division of work is happened on a particular area, joint auditors are combinedly responsible. Correct? Answer. Analysis will see. In the instant case, Studio Limited appointed 2 firms as joint auditor for conducting. As observed during the course of audit, there is a significant understatement value of receivable for which work is looked after by AB. In view of 299, AB will be held responsible for the same as trade receivable work was looked after by AB. Further, there is a violation of 299 as division was not been documented. Okay, fine. Since I think probably auditors would have accepted it. In investigation, auditor would have accepted that, yeah, that I only was allocated, but we didn't document. If that is the assumption, this answer is correct. Suppose if the other auditor, no, he is not agreeing that I am looking into that work. There is no reference to his name also. In such case, what will happen? Joint responsibility might come. Are you getting it? Here, the other auditor, here entire matter they gave. Division of work, how division of work happen? If division of work, I mean, what are the cases where combined responsibility will be there? That matter they gave. The joint auditor shall discuss and document the nature, timing, extent of audit procedure for common areas and specific areas, and the same has to be communicated. After identification and allocation of work among joint, the work allocation document shall be signed by all of them. Hence, in respect of audit work divided, each joint auditor shall be responsible only for the work allocated. In the given case, 2 auditors were appointed. Valuation of trade receivable was looked after by so and so firm. In view of the 299, AB and Co will be held responsible for the same as valuation was looked after by the same only. Further, there is a violation of 299. Probably the other auditor might have proved it that he is only held responsible. That is not looked after by me, that is looked after by him. But 299 violation is there, na? Both of them are responsible. With respect to 299 violation, both of them are responsible. With that area, if AB and associates admitted the fact that I am only responsible, but I didn't do audit properly. If they admitted the fact that he is only responsible, then fine. Otherwise, how do you prove that which auditor is held responsible if there is no documentation? It's difficult proving. When proving is difficult, what? What is the consequence? If proving is difficult, both combined responsibility. It will be treated as the work is not divided, correct? Where the work is not divided among the joint auditor. Here they divided, but they have not documented. Getting it? When documentation is not there, how to prove that work is divided? That's a question. So maybe examiner, if the same answer is thought by some other examiner, he might interpret that since work is not documented, it is not divided. He might give that answer also. Alternative view also possible. Are you getting it? Why you need to document? So that tomorrow if you blame me, I can show this documentation. If your documentation is not there, it is treated as what? Joint responsibility, technically, logically. Correct? Maybe here the auditor has agreed that yes, work is divided, just that it is not documented. So whoever, since he agreed his responsibility, we blame him. We will blame all the joint auditors because they have not documented it. Clear? It's a good question actually. Something like this also we have seen in 299. Something like this we have seen. I remember we have seen this. In our book we have seen this. You see later, okay, on 299 we have some questions on that. In 299, I think we have somewhere seen it. Okay, I'll just open and see. 299. First question, that only. Yeah, that only. The inventory valuation work allocated to M and associate, but there was no documentation of the work there itself. So here, in view of the above, it will be responsible for the same as inventory was looked after by M and only. Further, there is a violation. Same question, exact question in our question bank. Understood? Quality, we discussed it. Clear? So first question itself, I don't know, in our question bank you will find only quality questions. Getting it? Next. Manu Finance Limited is an NBFC and was in the business of accepting public deposits and giving loans. The company was having net owned funds of 1 crore 75 lakh. Correct? Huh? It must have 2 crore, no? And was not having registration certificate. Okay, fine. With RBI, accepting public deposits and giving loans. Without certificate, the company appointed by Yuan as stat auditors advised the auditor with reference to audit was to be taken and reporting requirements in view of CARO 2020. So you need to verify whether the company principal business criteria is satisfied or not. Procedure. What is the audit procedure and reporting requirement under CARO? Both they asked. Procedure also they asked. 2. See whether company is complying with net owned funds criteria. 3. Since the company has not applied to RBI for registration, it is a violating of RBI law, and the same has to be reported in CARO that the company is liable for registration and they have not obtained registration. But company is engaged in NBFC activity, so it must have minimum net owned funds of 2 crore and also should apply for registration to RBI. Correct? Now net owned funds is what? Not even 2 crore. It must be 10 crore. Right now net owned funds is what? 10 crore. See what answer they gave. The auditor is required to examine whether the company is engaged in business that attracts registration. So principal business criteria. Auditor should examine transactions in relation to activities conducted by RBI. The financial should examine like principal business criteria, whether net owned funds required are they maintained, whether the company has obtained registration, and report whether registration is obtained. If so, see whether if at all registration is not obtained, reasons. So here in the given case, the company is accepting so and so, which is less in comparison to the prescription of 2 crore. Actually, right now it is how much? 10 crore. Correct? Which NBFC it is actually? Manu Finance Limited. Since nothing is mentioned, by default it is what? 10 crore. Was not having registered service, so auditor has to require to report the same. This procedure is what they are asking mainly. This procedure is what they are asking mainly, which is a good question. Which is a good question. So in CARO we have a question. In question bank, no, mark it. In question bank under CARO, please mark it. We have a question bank on reporting requirements. Even this also I feel somewhere I have seen it. Yeah, it's not there. You please add a question. Refer. Refer MTP to November 2024. Question number, what is it? Question number 3B, right? Clear? Question number 3B. At the beginning of CAR also you can write. It's must read question. It's good. You can write in the important list of questions. Okay. I hope you made it right. PG and Associates conducted stock audit of the company as per instructions issued by so and so bank. However, instead of visiting the site where stock was lying, the firm relied upon MIS report along with inspection reports and photograph of stock taken by the employees. The photographs were also carrying the date and time. The same question we solved in our book. Either in the direct illustrations or maybe in the question bank. Somewhere we solved. Common with reference to Chartered Accountant Act and schedules thereon. Like just based on the document without obtaining sufficient appropriate evidence, you gave a report. Clause number 8. So that is clause number 8 violation. Clause number 2 also violated. Correct? Clause number 2 also violated. How come like you can take these reports? Clause number 8, clause number 2 of part number 1, schedule number 2. Getting it? And here you can even apply clause number 7 also, gross negligence. Correct? Clause 2, without you or your partner examining, you are certifying some report. Any report it will come, not just financial statements. Any report you can. Clause 2 can be applied on any report, technically. Clause 8, without obtaining sufficient appropriateness, you are certifying. Clause 8, of course, will come for sure. Getting it? Clause 2, I think, is there any specific reference that financial statements is there? In clause 2, certificates are also there. That's why I told this point. I told one more point also, they're little vague also. The clause number 2, 5, 6 also you see. 5 and 6 are duplications technically. I even told why it's a duplication. 5 is saying non-disclosure of material fact. Clause number 6 says material misstatement. Both are same. Non-disclosure is a misstatement as per the definition. And I told you clause number 2 is little vague. What is clause number 2? Kailash, read it. Okay, since the word financial statements is used, we can take a narrow conclusion. Only financial statements, clause number 2 apply. But clause number 8 straight away applies. Sufficient appropriateness you didn't apply and reported. Read clause number 8. Guilty of professional misconduct. Yeah, which is necessary for expression of opinion. If you fail to obtain sufficient appropriate evidence, which is necessary for expression of opinion. Here, what are you doing exactly? You are conducting stock audit. Stock audit, you will not give first of all opinion. But anyhow, fine. Question is there. So we have to consider this. With the same point we have seen in our question bank or somewhere. Same point we have seen. Same question we have seen in our question bank. In our question bank, what is this? Here it is there. Photographer. That's a keyword in this question. Yeah, you see the same question. They have not even given clause 8 reference. They straight away said clause 7. In January 21, they gave this answer. So straight away what? Clause number 7. You can straight away say they're guilty of professional negligence. How come you depend upon management reports and give an opinion? Correct? And that time I told both clause number 8 and 7. Remember? But in the answer only clause number 7 was given. Remember? And I told this point also to be important, I think, that time. If it is not there, add this also in the important list of questions. Next, almost all MTP2 questions we have in our book. Giridhar Limited owns 61% voting power in Mira Limited. So accordingly, it's a holding company. It however holds and discloses all the shares of stock in trade in its notes, in its accounts. The shares are held exclusively with a view to their subsequent disposal in the near future. Giridhar Limited represents that while preparing consolidated FS, Mira Limited can be excluded from consolidation. As a statutory auditor, how do you deal? Temporary control, accounting standard point you should write. In days, this is not permitted. That point also you should write. And equity and investment entity, that exemption also you can write. Clear? Mainly you write accounting standard point, temporary control, and where severe transfer restrictions were there, long-term transfer restrictions. Under Ind AS for these two it is permitted. As per A's point of view, it is okay. But from Ind AS, there is no exemption for temporary control. Yes or no? So that point also you can write. Correct? Abhinandan Limited, a company wholly owned by Delhi government, was disinvesting during the year, resulting 38% of the shares. I think recently we saw exact question. 68%, 38%, 62% still ownership is there. The shares were listed on NSE. Since the shares were listed, all the listing requirements are applicable, including publication of quarter results. For us, the finance manager of companies of opinion that show now the company is subject to stringent control by NSE, and therefore auditing requirements to private sector would be applicable to the company, and C&AG will not have any role to play. Still it's a government company. Yes or no? It is still a government company. 62% is owned. Government company definition you should write. And you should say that C&AG is one which will be You know, C&AG is the one which will be monitoring the appointment of auditors and subsequent auditors. All that. I think in CA Inter this is there, I guess. In CA Inter, exact question. Inter question, CA Inter. Where here you need to write government company definition, and you should say that Abhinandan Limited is still a government company. Yes or no? Because it is state government is owning more than 51% voting power. That's a government company. Since it's a government company, C&AG will have C&AG will appoint the C&AG will participate in appointment of first auditor and subsequent auditor. Therefore, the argument of finance manager that NSE regulations, no, that is not correct. So that's it. You read the answer, simple answer. Government company definition, I think you must write. Mr. Ram, a practicing CA, is well known for his expertise in handling GST cases at GST tribunal. He does not provide any assurance service. Given his long-standing reputation, CA Ram was approached by DF Limited to file an appeal in the tribunal against GST demand of 6 crore, which was imposed by commissioner, and to represent DF Limited in the manner. CA Ram offers to accept fees 3,50,000 for filing appeal and pleading at the GST tribunal. Comment on the Act of Ram in terms of Chartered Accountants Act and Schedule. He is a practicing CA and is well known for his expertise in handling GST. He does not provide any assurance. Given his long standing, he was approached by DF Limited to file an appeal in tribunal against GST demand of 6 crore, which was imposed by commissioner, and to represent. He was offered to accept a fees of 3,50,000 for filing appeal and pleading at the GST. Yeah, he can accept. He's not guilty. You can provide non-audit services and all. Yes or no? Non-assurance services too. Non-audit client. Anyhow, you are not providing any assurance or audit, so you can provide. You are not treated as guilty. I didn't understand exactly which clause they're testing. Because if at all he said no as a percentage of profit, na. Here it is not contingent also. CRM offers to accept a fees of 3,50,000 for filing the appeal and pleading at the GST. This is not contingent also. It is not even contingent also. It's a fixed fees, no? Clause 5, part 1, schedule 1. What reason they gave? Oh my God. They have not even given clause 5. Deemed to be in practice when individually, okay, in the opinion, okay, pursuant to 2, a member shall be deemed to be in practice if he in his professional capacity, neither his personal capacity as an employee, acts as a representative of taxation matters. Okay, in the given case, Ram practicing CA, and also therefore Ram is not guilty. He is already practicing CA. Why deemed to be in practice? Definition they are supposed to give. Tell me. You're getting my point? See, I will argue deemed to be in practice if at all he is not having COP. If at all he didn't get COP and representing a client on a taxation matter. So then, since representing client not as an employee but as an independent person, you are deemed to be in practice, you must obtain COP. That I would have told. If at all there is no COP for him, he has COP. You just said deemed to be in practice definition and you just described the fact once again and you said not guilty. The question is not correct. You understood my point? The answer and question is not syncing for me. What are you saying? An institute shall be deemed to be in practice when individually or in partnership he is receiving consideration for some service. What service? A member shall be deemed to be in practice if he in professional capacity, neither in personal nor in as an employee. You are in professional capacity, you are representing taxation matters. You are deemed to be in practice. That's good. He is already practice. He is already having COP. In the given case, Ram is a practicing CA, provides non-assurance services. Okay, he is approached by DF to file an appeal, which was imposed, and to plead on the matter. CRM offers to accept the case and agrees to charge a fees of 3,50,000. That is not even contingent also. That's why I am saying that clause and all, it didn't strike me. Therefore, Ram is not guilty of profession. The question itself is wrong. The question is wrong, answer is wrong. Both are wrong. It's not proper. Clear? It's not proper. But if the same question comes, you need to write the same answer. No, like you can be representative on taxation matters in professional capacity. You are deemed to be in practice in same question. might be different. Some difference might have been there in our question bank, that question and this question. Just see that. Okay. Then Quality Limited is engaged in the business of manufacturing and distribution of various ready-to-cook products, vegetables, noodles, etc. The government made certain changes in the rules and regulations relating to this sector. Consequently, management decided to go for expansion. Management was looking for some financial investor who can fund some part of the proposed expansion. Okay, management decided to go for expansion. Okay, Amman is interested in the venture and appoints you to act as an advisor to the proposed investment in the business of quality. You have to investigate the audited financial statements and ensure that valuation of shares of the company on the basis of audited financials is appropriate. What process will be used for checking? Can the reliance be placed upon already audited statements? Investigation chapter. Initial discussion is can an accountant place trust on already audited financials? So see that. Straight question. I even told when I'm explaining investigation chapter, I told this reference. When assessing the impact of uncorrected misstatements in audit of Mini Builders Limited, Mr. Gautam encountered a significant issue related to calculation of materiality on the revenue. The initial materiality calculation was based on estimated figures provided by the management. Management, to estimate full year revenue, extrapolated sales for 11 months to arrive at a figure of 12 months. 11 months sales figure already, so they projected what would be the 12 months sales. However, given the nature of Mini Builders as a company in the construction where monthly sales exhibit substantial variation, a unique challenge has emerged. The actual sales for the last month deviated significantly from the estimated sales due to unexpected slowdown in the project completion. As a result, the last month sales actually represent only 30% of the estimated. Okay. Now Mr. Gautam is confirmed with a dilemma regarding appropriate approach to be evaluate uncorrected misstatement using the previously calculated materiality. Kindly guide Gautam in light of the relevant standards on auditing. It's a very good question. It's a 450 come 320. So before you evaluate misstatements, first you should evaluate, before evaluating the impact of uncorrected misstatements, auditor has to consider materiality. Auditor has to reassess materiality. The assessment is crucial to confirm the ongoing appropriateness of materiality in light of the actual results. The determination of materiality in 320 often relies on estimates of the entity financial results, given the actual results may not be known during the early stages. Therefore, before auditor proceeds to assess the effect of uncorrected mistake, it becomes necessary to adjust materiality calculated based on now available actual information. Further, SA 320 outline, as audit progress, materiality can be revised for specific class of transaction account balance. The revision is prompted by the auditor awareness of information that would have led to different initial information. Typically, significant revision occur before evaluation of uncorrected misstatements. Before you again evaluate the mistakes, once again you check whether your materiality is correct or not. However, if the reassessment of material result in lower amount, the auditor must reconsider performance materiality and appropriateness of the procedures. This is crucial. In the present case involving Mini Builders, it has been identified that materiality calculated at the beginning of the audit for revenue was based on estimates provided by management. The management extrapolated for the full year, but last month sales 30% of only projected. In this case, Gautam auditor must review and reassess the materiality initially determined to ensure its continued validity. If the reassessed materiality is lower than the previously calculated, he must reconsider performance materiality and appropriateness of further audit procedure. This meticulous approach is essential to gather sufficient appropriate evidence. In exam, you can write revision of materiality part and revision of materiality part, and you can write directly conclusion. For that also they will give marks. Getting it? If you write this much answer, detailed answer, they'll give you full out of full. But this much is not possible. You will get at least 2 to 3 marks if you write revision of materiality point and then conclusion. That by reading the question we understood. Revision of materiality is required, that we understood. Correct? And the auditor has to revise the materiality, we understood. Along with the materiality, you should also revise performance materiality. Since you revise performance materiality, you may have to change nature, timing, extent of audit procedures. Bit challenging question. Why will it come? No, it's not dealing with. See, they ask what question they're asking. You see, they're asking question in the light of materiality and 450 only. 540 they didn't. Understood? There is no reference to 540 directly or indirectly. The effect of uncorrected misstatements and materiality. This is actually the same question. I feel it's there in C Enter. Same question is there in C Enter, I feel. Similar question is there. So we have to re-evaluate materiality before evaluating impact of uncorrected misstatements on the financials. That is the conclusion in this. And if you find that there is a change in circumstances or you got some knowledge that is different from the initial determination of materiality, revise the materiality in light of the current circumstances, current knowledge of the business. And if there is a revision in materiality, you should also revise performance materiality and plan nature, and revise nature, timing, extent of further audit process which are already performed. Therefore, in the given case, since the so and so issues happened, last month turnover suddenly declined, initial materiality, whatever audited determined, has to be reduced. Yes or no? To answer the current events. And that's it. That conclusion you give. Enough. Very good question. Two questions until now were very good. One is 7-10 question and this one. These two are extremely different. Extremely different questions from what we generally see. Yes or no? So this is a very good question. In our book, do we have 450 some questions? Any question on 450? Same question is there. In our book it is there. Same question. Same question. In May 24 RTP it is there. In May 24 RTP it is there. When assessing impact of uncorrected misstatement of construction, 11 months to 12 months, 25%. In May 24 RTP it is there. Same question is there in the RTP, but we didn't discuss specifically, but I uploaded a video on RTP. Briefly I discussed, I would have discussed briefly this point in RTP. Understood? That's why I always tell last 2 attempts or 3 attempts is very important. 11 attempts, 6 attempts not required, 12 attempts and all. Last 3-4 attempts RTPs and MTPs, that's enough, because in the recent past only questions are very qualitative. The May 24 RTP it is there. So they are asking what are the capitals they are reporting. It has secured a loan to expand its operation, invest the funds in purchasing raw material and machinery. The loan along with revenue generated from existing sales contribute to the pool of resources available for production. Machinery capital, nothing but man-made capital. It has increased the number of employees. This is what? Human capital. Correct? 2 capitals, BRSR. First one, machinery and all they are using. Of course, loan is also there. No? It's debatable. Boat, amma. It also comes under that. All that, yeah, you can classify it under finance capital. You can classify under finance capital, but there is one more capital, man-made capital something. Manufactured capital. That also we can. Amma, factories. It secured a loan to expand its operations, invest funds in purchasing material and machinery. The loan along with revenue generated from existing sales contributes to the pool of resources available for production. Okay. They're predominantly talking about funds availability. Therefore, it is finance capital. And you can write additionally saying the machinery, factory, plants, whatever the company has, that's called as manufacturing capital. You need to write, I told you in exam, they'll ask you a case study kind of question and identify what capital it is, you need to write. So now you need to write, discuss about, identify which capitals. So you need to write finance capital question, finance capital answers, and human capital points, and then you should figure out here social capital. Which one? Okay, flagship CSR, sorry, I thought employees. By seeing the number, no, I thought employees. Beneficiaries are increasing, CSR beneficiaries. So it's not employees, I thought it is a number of, okay, beneficiaries. Beneficiaries means obviously social capital. If it is employees, suppose if at all CSR is not there, it is employees. Employees are increasing. Human capital, that's it. So while conducting audit of Black Mountain Mining Limited, which is involved in phosphate mining, decided to engage an auditor expert to environmental liabilities and site cleanup. Okay. Black Mountain is reappointed Mr. Aman as independent expert for this task. For the past 5 years, the management has consistently reappointed Aman. Okay. He calculated the environmental liabilities, all that. I think SA 540 question. environmental liabilities, that and all came. Okay. Guide the audit matter and other with respect to requirements pertaining to evaluating objectivity of management expert. This is there in our 620. In 620, whether to use an expert, whether to use an auditor expert or not. Inside that, first see if management expert is there, how to evaluate integrity, how to evaluate objectivity of management expert. If at all you concluded management expert is not objective, then you go for auditors expert, correct? It's straight question only, pretty straight question. This is straight question, asking information, issue questionnaire, routine, clause number 12. Yes or no? Auditor should not let somebody to sign on his behalf except on administrative documents routine. This is a straight question in our question bank. Ethics. Clause 12, part 1, schedule 1. The practitioner shall not accept compilation unless practitioner agree with the terms of engagement with the engagement party if different. Okay. In view of the above, mention the responsibilities of the management to be agreed on for compilation engagement. Management only responsible for preparing financials ultimately. Practitioner will only assess the management in preparing compilation. Management only responsible for determining applicable financial reporting framework. Like that, some responsibilities of management is there in case of compilation. So that answer you should get. Straight question. A review of financial statements include consideration of entity's ability to continue as a going concern. If during the performance of the review, the practitioner becomes aware of events and conditions that may cast a doubt about going concern, enumerate steps to be taken by practitioner. In review 570 procedure. Under review 570 procedure, what points auditor has to verify? What points reviewer has to verify? If there is any significant events that cast significant doubt on the going concern, that point you should write. Review. In 2400, this answer is there. That answer you should write. I told you in 2400 also. Clear? PSU audit question 1 only there. Government company question is there. No? That is PSU audit question only. It's a PSU audit question. In PSU audit only, I think we have that kind of question. We have that kind of question in PSU audit itself. Understood? That's it. So some questions are tricky. 2 or 3 questions are tricky. That's it. Not predominantly. Predominantly, we are very good at. That's it. Confident? 1 hour 40 minutes it took. Really, this paper is challenging. MTP2 is good. It's very challenging.